stocks, GameStop and then also AMC, up, down, all around. And there was a lot of commotion yesterday with these trading platforms halting some of the trades. So we're going to bring that to you right here now on NewsNOW from Fox, everybody. And we're going to go out to Fox Business's Lauren Simonetti with the very latest. She's been covering this with a breakdown. Lauren, thank you so much for joining us on NewsNOW today. It's been, wow, what a week.
I know, I'm exhausted. I'm excited because we've really never seen anything like this, but it is completely exhausting and dizzying. You know, it's so interesting. I have the most random people asking me questions like, should we invest in GameStop? What about AMC? And, you know, what's the answer? Because we've never seen this chat app group, this army of Reddit traders, if you will, that are using popular apps like Robinhood, that it's so millennial focused. It's like a casino. You can't go to the casino right now because of COVID, but you can use this app on your phone. You know, buy stocks for free, buy options for free, confetti falls when you do that, and it's exciting. But on this Reddit group called WallStreetBets, these guys, these retail investors aren't so average because they're smart. They actually figured out, oh, American Airlines is the most shorted airline, and AMC is highly shorted, and so is GameStop. That what they did is they said, we are going to take on the establishment, the suits, the hedge funds who short sell these stocks, meaning the stock price goes down, and we're going to push the price up. And then they're going to just have to scramble to cover themselves, which is exactly what happened. Melvin Capital Management had to be bailed out. And other firms, even if they're not directly shorting any of these named stocks, they're getting hit because of a contagion effect. So right now, that Reddit army, they're winning. And then something happened yesterday. Robinhood's, this app, and others said, this isn't working. We are going to have to put some sort of handcuffs on these trades. And they did. And their army of users got really, really mad at them. There were protests in D.C. There were protests outside the California headquarters of Robinhood. There were protests at the New York Stock Exchange. Nothing major. They were small. But the point is, hey, Robinhood, you bill yourself as having this mission where you empower the people to set up their financial future, to take on Wall Street, and you just restricted us from trading. So most of those handcuffs were taken off today, and that's why these stocks are back up. But I think in the end, capitalism wins because GameStop is going to have to justify its, I think it's a $23 billion valuation right now. And the last I checked, they're in malls, and malls are struggling.
Yeah, definitely, because you look at some of the times within the store, there was like 2 or 3 people, and a lot of people are thinking, well, how is this even happening? Now, when they were halting yesterday, it seemed like the vibe was then from these trading platforms, you can make money, but you can't make that much money. Is that what really was upsetting people so much yesterday?
Yes. Yes, because I call it handcuffs. What they said is you can sell your stock, you can't buy it. So that basically kept a lid on the stock. And people just got really mad that, hey, you don't do that to Wall Street. Why would you do that to us? And this morning, there are some limits, but you can actually buy this list of 13 now popular companies.
And Lauren, what about class action lawsuits? We saw some of that happening yesterday.
Yeah, of course, and it's going to continue to happen. Robinhood is being sued because it wouldn't let its users, and notice I said the word users, access fully to what they should be able to have access to. This app is free. You know, Robinhood came into existence, and E-Trade and Ameritrade and Charles Schwab, they're all free. But you're a user, not a customer of Robinhood. Because for you to use their app for free, they have to get paid by somebody, the middleman, if you will, to actually make your transaction. And, you know, they were, and I'm not taking sides here. Quite honestly, I don't even know whose side I'm on. I think both parties are right, and I would not want to be a regulator having to figure out what to do with all of this. But, you know, Robinhood said, well, we're looking to IPO. We want to be a public company. But we need cash. They had some sort of liquidity crisis because they had to pay their clearinghouse to get all of this done. which is one of the reasons that they limited trades. So is it legal? Absolutely. But people are mad and suing them because that's not what they signed up for.
Yeah, it's all so interesting, and I think it's going to be even more fascinating when and if this rug is pulled. And unfortunately, a lot of people are going to learn there that there's going to be some bag holders a little bit later there. So that.
Yeah, and you know, final point, you probably have to go for time, but it's called irrational exuberance. And we saw it in the 1990s when everybody was talking about pets.com. We saw it during the financial crisis with housing, and we're seeing it again right now. And unfortunately, the little guy does get hurt. They're left holding the bag. But because of social media, what we could have form is this separate, you can call it a new digital marketplace that operates differently from Wall Street. Some people are talking about the roots of that forming right now because Main Street is really fed up.
Yeah, no doubt about it. I think this past week, it's definitely going to be a movie, maybe in a year or two there. So it'll be fascinating to watch there. Lauren Simonetti, thanks so much for breaking it all down for us today. And
of course.
We totally appreciate it. Thank you so much. We're going to continue on here. More news now
Have
from
a good
Fox.
weekend.
Yes, you too. More news now from Fox coming up next.